So yesterday we have discussed how tax rolls or certain tax services that we provide are going to become a self-review threat, right? So the same way our company, our audit firm would also provide expert IT services to the clients, all right? And IT services, again, it's a non-auditing service, okay? So if we have the personnel enough to manage this entire system, we are going to provide IT services towards the client, okay? So when this particular thing is done, it would also create a self-review thread, because as I have told you earlier, when we are going to conduct audits, the first thing that we do is we are going to review every controls that are, or not review, we are going to inspect every controls that are in place of our client company, right? So here, when we are going to review that, and if we are the ones who have given the client company with the IT services, we are basically reviewing ourselves, because we are going to use the client company's computers, we are going to use their softwares that are there, right? Okay, so that is a self review threat, okay? And this self review threat would have to be assessed on the nature of how it's been provided, that is the nature of the service, okay? And how much the audit is going to interact with the service that is given, okay? And how much the auditor is going to rely over the IT systems that we have given our client. Clear? Now, there are some certain IT services that are basically permissible for us to do for the client, okay? And these are maybe design, maybe we are going to give them a layout of how the systems are going to be, okay? Or else we are going to give the implementation or design of a system which is not being used by us auditors in the client company, all right? Now, it is also permissible for us to give them or suggest them off the shelf accounting software. That means it is not developed by the accounting company. Now see, what is off the shelf? Off the shelf meaning, if we are going to, suppose we are going to a supermarket, okay, we are purchasing certain things, we are going to pick it off the shelf, that is we are going to pick it off the rack, right? Same way, there are certain softwares that are available, that is the accounting softwares that are readily available, which can be taken, all right? So this means that this particular IT system is not coded by us, okay, but we are going to help them implement those systems, we are going to help them install those systems. Understood? Now, evaluation and recommendations on system designed or operated by another provider or the entity. Or else what we can do is we can suggest them certain company which is going to help them prepare that IT systems, all right? Now, for all the clients, we are going to separate out, even if we are going to do those permissible IT services, we are going to separate out two teams. One audit team would be attending the auditing services and the other would be attending non-auditing services, all right? And this is so that the the professionals that are set up by the company for both of the activities are different, okay? So there is no connection between them, all right? Now, the second thing that we do is ensure management fully owns responsibility for IT controls and systems. Now, whatever is being provided, it should be acknowledged by the by the management, okay? So they should actually take the responsibility of operating those systems and does not involve blaming anything over the auditors or the audit firm, okay? Now, if it is for the listed company, the general rule is that it is prohibited, okay? So providing any IT services that are linked with the internal controls of the organization is clearly prohibited. Any or else any services that are going to directly impact the FS is prohibited. Clear? So these things are not allowed. Now, next one is valuation services. See, valuation services is when we are going to help our client value their maybe assets or liabilities, all right? So when we are going to do this, we are also basically creating a self-review thread, because when we are going to go to the client company in order to do the audit, we are basically checking what we did ourselves, right? So this is so it can be assessed, that is the risk, sorry, not the risk, the threat can be assessed on the basis of how much the judgment of the audit firm is involved, how much is the subjectivity, how much have we covered in it. Okay, so what are the impacts of that particular valuation in the financial system. All right. Okay, and also the dependence over those valuations in the future events. Okay, now if there is any case, in any threats. Okay, so if what we provide, that is what the non-auditing services that we provide, in no way creates a hindrance over our auditing services, then it is totally allowed. All right, but there are only limited things that comes under that category. All right, so if a client is a non-listed client, okay, what do we do? Okay, so we are going to avoid all the valuation of the items which are basically going to have a significant impact over the FS, that is the FS we are going to audit for, right? So if it is a listed client, we are not going to do the valuation services. Okay, and it doesn't matter what valuation is done, it doesn't matter. The general rule is that we are going to keep away from it. All right, now for all the clients there is a general guideline, that is, if at all we are to value something, okay, first things first, we are going to separate out two teams, that is one for auditing service and the other for the non-auditing service. Okay, and if it is not enough, we are going to, or if it is to make it more trustworthy, we are going to have an independent reviewer review the work. Okay, so these two things are basically all very common in all the self-review threat. Okay, now the next type of self-review threat is providing corporate finance services. Okay, so corporate finance services is basically providing assistance to the client so that they can be advised upon their financial funds available. All right, or anything that is related with their financing of certain capital structure. Clear? It can be an equity, it can be debt. Okay, it can be anything. So whatever service that we are providing is actually going to impact our audit, because the concept of equity and the concept of debt or the preference shares all comes under the FS, right? So whatever we are going to provide is basically what we are going to examine. All right, now what are the safeguards? If at all we are going to provide those services, okay, we can actually outsource those services from a non-audit professional. All right, okay, and we are going to keep a separate reviewer who is going to review everything that he does. Okay, clear? Now avoid corporate finance services linked to promoting audit client shares. So any corporate finance service that is linked to audit client shares should be avoided. Okay, and also we are going to refrain from any such accounting service, any such financing services which would involve us in advising them how this particular thing is going to be represented over the financial statement, or how it is going to be treated in the financial statement. So we are going to refrain from doing all that. Okay, next one is legal services. So there are, if we are running a company, there are certain things that we have to do, right? So when we do legal services, and when the client company accepts something that we did, we are basically going to audit the same thing again when we are going to do external audits for the client, right? So this particular thing should be separated out, or this particular thing shouldn't be there, right? And this in turn would create two threats. One is the self-review threat, obviously, because we are going to audit the same client. The other is that when we are going to legally represent, or when we are going to do anything legal, any legal services to the client, it might come out to the public as we are actually representing that client, right? So it would create advocacy threat. Okay, now if we are going to provide that particular service, then we must consider taking a legally authorized person, or a legally or a legal personnel who is going to attend to that. Okay, now when we are going to provide that particular service, we have to actually keep in mind the materiality of the financial statement that is going to be affected, that is what judgment it would create on the material aspects of the financial statement. So these must be evaluated before joining, or before giving a nod to the legal services that is being provided to the client. Okay, now what do if at all, if a company has huge resource, that is we have a separate team which involves many legal advocates, or many authorities, or many authorized person who is capable of doing legal activities. Okay, then we are going to keep them separate, that is they are going to be a non-audit team professional. All right, now to counter this, that is if we are going to keep two teams, it comes along with it, like we are going to provide a separate reviewer who is going to review every work that they have done. Okay, now the third safeguard is prohibit a firm's partner or employee from being general counsel for an audit client. So in this scenario, okay, the firm's partner or the employee is not going to provide any kind of general advices related to these legal systems to the client. Okay, that is not done, that is prohibited. All right, now avoid advocacy roles for an audit client, especially when material amounts are at stake in the financial statement. Now advocacy is in a way another threat. Okay, so in order to avoid that, you should, as an audit firm, you shouldn't ever represent your client in anything that is material to the FS especially, but otherwise also you are not supposed to represent your client until it is necessary. Okay, 11th one, temporary personal assignments. Okay, so temporary personal assignment is like, okay, your audit firm is going to provide someone from your team to the client company because they have some labor shortage. Okay, so in order to cover that up, they have asked you for a personnel to work there for a few months. Okay, then you're going to provide a personnel from your side, right? You're going to provide a staff from your side. Okay, and this particular arrangement is the temporary personal assignments. Okay, now this in turn would create self-review threat. Okay, obviously, because this person is the audit team member and this person is temporarily working there as an employee. Okay, and when it is done and when we are going to provide auditing services, we are basically reviewing our own things, right? And this would also create an advocacy threat, because in the eyes of the public, they see that someone from the audit firm has actually been working that client has actually been working with that client company for some time now, right? Now this would also create a familiarity threat, because when this particular staff is going to work there, he's going to familiarize himself, he's going to form acquaintances, right? So in the future, when we are going to provide the auditing services, it would so happen that we are this particular person is already familiar with the client, right? So it would create a familiarity threat. Okay, now if at all this particular arrangement is for a very short time, let's just say there is very difficulty in arranging things, so the client asked us to help them. Okay, and we are providing a client providing an audit team member for just, let's say, 2 weeks. It is allowed because it is a very short period, right? Okay, next one, the individual shouldn't take management responsibility. So when we are going to provide this particular individual, this particular person is not or shouldn't be allowed to do managerial responsibilities. Understood? The next one, the client must direct and supervise the loaned person. So whichever person is going to go there, this particular person is to be controlled by the client. Okay, so he is going to directly control and supervise this person. Okay, so what are the safeguards? Okay, now when we are going to audit that particular client company, whatever work this person has done, it would be reviewed by an independent reviewer. That is, an additional review would be done. Okay, and this particular person is going to be removed from the audit team when we are going to audit the client company. Okay, now avoid assigning them audit responsibilities for functions performed during the loaned assignment. Suppose maybe due to shortage of labor, maybe that particular person is in our auditing. Okay, so this person mustn't be allowed to enter those premises which he has worked, or enter those, or look into those areas which he has worked. So we are going to keep him away from whatever he has done, and we are going to assign him something that he has not or never done in that particular client company. Understood? Next one, serving as a director or officer of an audit client. Okay, so when this particular the same thing, that is, in the previous case it is just an employee. Okay, in this case it is a director. It is the role that the audit team is going to play is that of a director or an officer of the audit client. Understood? So what is the safeguard to that? This in turn would also create a self-review threat and a self-interest threat. Okay, that we know. Now what are the safeguards? Okay, so by general rule, it is not allowed for any partner or any employee to be a director or an officer of that particular client company. Okay, now this particular person who is going to go from the audit firm, he is actually allowed to be a partner or an employee. Okay, but there is a there is a condition. Okay, so he can only be a company secretary to that client company by the local laws. Okay, and he is allowed to take management decisions. Okay, and this particular decisions would be on a routine business arrangement, or it would be for administrative purpose. That means no strategic problems or any strategic issue can't be interfered by this person. So this person only looks over the day-to-day activities of the company. Okay, now next one, client staff joins audit firm, recent service with an audit client. So what happened here? So there is a client staff, that means someone from the client company is going to join our audit team. Okay, so what is the threat? The threat is that the audit team member has been a company's employee recently, and that same company is what we are going to audit, right? So this would actually create a self-review threat, because what he did is what we are going to examine. Okay, now this particular threat also involves in the assessment whether or not what role he has played in that particular company. Okay, what job did he do? Okay, so to what extent is he involved in making crucial things that are prepared in the FS. All right, so all these things should be considered before actually taking him in on the audit team. Okay, when prior service predates the audit period, assess threat based on these factors. So maybe it is like there is a very big time gap between his joining in the firm and being an employee, right? So in this case the threat is going to be minimalized, because he is no more a part of that particular company since a year or so, right? Okay, but suppose it is on an immediate basis that the client company's employee is joining our team, then all those factors that I have mentioned before should be taken into consideration. So what are the safeguards? Okay, safeguards it's obvious that is we are going to remove that particular person from the audit team, and he is going to be assigned a different company than the company he has already worked for, right? Now if there is a prior year service, that is an immediate service, then whatever this person is going to do is going to be reviewed by an independent reviewer. Okay, now advocacy threat. Okay, so we are on the last part of the chapter. So advocacy threat, as we have discussed earlier, it is like we are going to represent our client. Okay, and this would create a public view that this particular audit firm is always in favor of that client, right? And this would actually compromise the fundamental principles of the auditor, okay, and this would create an advocacy threat. Okay, so what is this? Promoting a client's position or representing them aligns the audit firm with the client. Okay, now what are the examples? Maybe in some there is some disputes or cases going on, lawsuits going on against the client company. Okay, and without being asked we are going to provide them service, or without being asked we are going to represent them. Okay, and this would create a advocacy threat. So all these things and the other things that we have studied earlier, that is maybe finance, negotiating finance, maybe loaning a personnel, okay, or providing valuation, these all would create an advocacy threat. Okay, and this is very short here because many of the advocacy threat we have here has been already discussed before. Okay, last one is intimidation threat. Okay, so intimidation threat is in a way that you are pressurized to compromise your fundamental principles in favor of someone. Okay, that is intimidation threat. Okay, and almost all the self interest threat is actually linked with intimidation threat. Almost all the familiarity threat is actually linked with intimidation threat. Understood? Okay, and what are the intimidation threats? First one is the fee dependency, right? In the fear of losing the fee that is overdue, we are going to provide, we are going to compromise our fundamental principles, right? And gifts and hospitality also same way. Okay, in the fear of not receiving the gift or hospitality, we are pressurized on turning a blind eye towards the company, right? So this is actually someone feeling pressurized over to turn a blind eye over whatever the client company is going to do. Okay, so this chapter is over. The next thing that we are going to do is we are going to do some problems from this chapter. Okay, and statistically speaking it hasn't been asked much nowadays, but we never know because HCA often changes their patterns. Okay, so whatever happens, maybe in this particular exam it might get asked. Okay, even if it doesn't ask, it is going to be there for MCQs for sure. Okay, so whatever we are going to practice from here on, it is going to be there for MCQs or for essay questions if they are going to change the pattern. Okay, so to be on the safer side, we are going to do problems in the next class. Okay, thank you.